Hello, hello.
Hello.
Good afternoon.
Hi. Good afternoon.
Going to give everyone a moment to log in. If I could ask everyone to keep their microphones on mute except the presenters, please, just to minimize any audio feedback, that'd be awesome. All right, so we have a huge group of you here today, and we still are waiting for a few more to hop on with us, but we're going to get started right on time. All right. So while we're waiting, if you all just want to pop into the chat and introduce yourselves, put your class year, when you graduated from Florida Tech, what you studied, if you ever had Professor Muth while you were here, you can put that in the chat too. And while you're doing that, I'll introduce myself. I'm Jillian LeClaire with the Florida Tech Alumni Office, located here in Melbourne. And I'm thrilled to host this virtual lunch and learn lecture for you today on cryptocurrencies, non-fungible tokens, and blockchains, which I know nothing about. So I'm really excited to learn about it, as I hope a lot of you are as well. We actually broke the attendance record for this event today. We had 377 alumni register, and the number for attendees is climbing, and I bet we're going to get to well over 200. So thank you guys so much for your interest. This is clearly a very hot topic right now. We all kind of want to know if this is something that we should be listening to, and it's becoming more clear that it is. So we have two experts here with us today who are going to tell us more about it. I'm pleased to be joined by Florida Tech faculty member Tim Muth, who teaches courses in international business, personal finance, and creativity and innovation in the Nathan M. Bisk College of Business. He is a fan favorite with our business alumni, as a lot of you are indicating in the chat. So I'm so pleased that he agreed to volunteer his time today to give this presentation for us. So thank you, Professor Muth.
Welcome, Jillian.
And we also are joined by a class of 2014 College of Business alumnus, Kyle BOCCI, who currently works as a financial analyst and who will be talking to us today about blockchain. Again, something I know absolutely nothing about. So a big thank you to Kyle as well for joining us today to talk about that.
Honored to be here. Thanks, Jillian.
So thank you for everyone introducing yourself. There's too many to read, but hopefully you all will kind of scroll through and see if there's anyone here that you know or was a former classmate of yours. And just so we can gauge what your involvement is on these topics, I'm going to launch a couple quick polls. So this one, we just want to know, do you currently own any cryptocurrencies? All right. So it looks like only 12% were early adopters, which is pretty typical. 20% recently started using crypto or investing in it. 37% said not yet, but I'm considering it. And 31% says I'm skeptical if I ever will. I will include myself in that. That's the numbers for you guys. And then I'm going to launch the next one. It's not letting me do the next one. Oh, here we go. Okay. And this one is about NFTs. So do you currently own any non-fungible tokens? All right. So the majority of us, 61%, said no, but I'm considering whether I should. 30% said, heck no, I'm not interested. 7%, yes, I own one or two. And 2% said, absolutely, I own lots of them. So hopefully you guys can pipe in and tell us your experience with that as we continue on. So with that, I'm going to turn it over to Professor Muth.
We're going to start with a video, Jillian. That Jillian brought to my attention. I was watching Monday Night Football and saw this commercial.
History is filled with almosts, with those who almost adventured, who almost achieved, but ultimately, for them it proved to be too much. Then there are others, the ones who embrace the moment and commit. And in these moments of truth, these men and women, these mere mortals, just like you and me, as they peer over the edge, they calm their minds and steel their nerves with 4 simple words that have been whispered by the intrepid since the time of the Romans. Fortune favors the brave.
Wow, fortune favors the brave. Thank you for joining us today. And I got real nervous. I was watching the sign-ins, and my daughter Lauren signed in as my favorite daughter. She's gonna get me in trouble. I saw a lot of my friends, but something Jillian said, which isn't quite true, that we're not experts, that as we started putting this program together, that Kyle and I debated back and forth, is this a lot of hype and turned out not to be very much, or is it the real deal? And we're going to explore a couple different things today. I'm not sure we'll answer that question by the end of it. I saw somebody had popped in one of the chats, said this was like keeping up with the Kardashians, or to use one of the phrases my students use now, FOMO, that people are afraid of getting left out, so they jump on the bandwagon. But let's jump into this. So what's this all about? So I was doing some reading and came across the first slide that Jillian put up, a new term, DeFi, which is kind of ironic. And I noticed one of my friends, Chuck, put a comment on the discussion board that he and I worked for a semiconductor company that worked in the early days of Wi-Fi. So somebody's stealing the Wi-Fi acronym here. But DeFi, I said, what the heck is this DeFi thing? And as I was reading, it was a way to move sort of all this banking infrastructure online, cut out the middleman, shift the power from banks back to us as individuals. Things would be faster, cheaper, more transparent. Life would be great. And I read a few quotes as I was reading through this stuff. One writer said that when moved to DeFi, the banking system, financial system never sleeps. It's 24/7. There's no banking holidays. There's no weekends. Somebody else said it's like money Legos, that we have all these software tools. We can do all sorts of things as we put different pieces together. And another quote that really got me interested, that somebody said, blockchain apps do to bankers and brokers what the internet Amazon did to brick and mortar retailers. So I don't know if that's true or not, but some people envisioning that, you know, as we look back on things that many of us have seen in our lifetime, this may be a big inflection point for the banking system, financial systems. Or maybe it's just a lot of sound and fury without too much happening. We shall find out. The other term I came across was digital wallet. And I don't mean to take Kyle's thunder, but if you're watching the pictures now, if you had a guess, we had a poll on which one was older. I think probably I would get those votes. But Kyle kept telling about wallets. And I said, you know, like, this is my wallet here. What's this digital wallet thing? And so I'm still waiting to hear him tell me what a digital wallet is. We'll try the next slide then, Stephanie. So we'll move to the topic that probably gets the most publicity right now, Bitcoin. And if you'd show that chart that we had, Stefan, Jillian, that as anybody that follows us knows, it's been a crazy trajectory. That back in the early days when Bitcoin came out, selling for a few $100, now it's over $62,000. So if somebody jumped on it early, maybe they made a lot of money. But those of you that followed it, there's a lot of ups and downs and a lot of questions of whether the value is real or not. But clearly, some folks have made a lot of money. Some people are putting money into it. And it's one that to take a look at. Whether you go there or not, it's going to be up to your preferences. And Jillian, the next one then. So I condensed Bitcoin history into 4 bullets. Started in 2009, January. And then a small factoid, which one of my other students, Edward, actually told me this one a while back, that the very first purchase happened in May of 2010. Gentleman walked into Papa John's, bought 2 pizzas for 10,000 Bitcoin. So we quickly did the calculation and said that he paid about $600 million in today's value for those 2 pizzas. I hope that they were enjoyable. Then as things started going a little bit more mainstream, back in 2020, PayPal said they will start accepting payments. And some retailers will take payments in cryptocurrency. And then just this past summer, they got 15,000 people to a Bitcoin conference down in Miami. I'm sure they're all masked and socially distanced. But yeah, there is a lot of activity around these areas now. And a lot more people are getting involved with it, more mainstream kind of folks. Jillian, mind moving on to the next one, please? And just on that vein, those of you who followed the market in the last several weeks, a new ETF, the very first ETF related specifically to Bitcoin. Actually, it trades on Bitcoin futures, not Bitcoin directly. But they raised $1.2 billion in the matter of a couple of days. MasterCard has come out, said they also will start accepting, issuing debit cards and credit cards that accept crypto payments. And then I was watching the World Series the last week. And I kept seeing this FTX. It was on like the back behind the catchers. And I think last night, if I recall, the umpires had it across the sleeve of their shirt. I said, what's FTX? And so I went looking up on Google and said, wow, it's a cryptocurrency exchange. So there's a lot of activity around this one. And, things are feeding on themselves at this point. And maybe that's driving the craze, or maybe it's real. I don't know. We'll continue to find out. And then as happens with these kind of things, the banks are starting to get nervous now. At first, they ignored all the cryptocurrencies and said, it's kind of the crazy people out there fooling around with this stuff. It's just the fringe element. But it's funny, I saw one of my friends also, Bob Keimer, who teaches with me at Florida Tech. We talk with our students about disruptive innovations. And one of the things Christian Clayton talked about was the early days of a disruptive innovation, that sometimes the product is not too good, it's kind of slow. It's just the folks out on the edge are using it. But over time, it takes things over. The way you do things are not that way anymore. And, the more and more I looked into this, I started wondering if that was the case, because there's more banks now looking at how they get into it. But also the banks are nudging the regulators, some for good reasons, saying, hey, this is still kind of the wild, wild west territory. People could lose a lot of money very, very quickly. I think just last week, there was a scam where $2 million or so of cryptocurrency issued around the new game that they play with the South Koreans, that somebody put up a fake website, collected some money, and ran off with it. So the regulators are looking at us for good reasons, but also the banks are going, if this is going to happen, we want to make sure we get our share too. So there's a lot of talk about what's a security, what's a bank, is this cryptocurrency going to be subject to regulation? And if so, will that slow things down? Will it make it safer? Will it make it comfortable for the average person like you and I to get involved with it? Also, what we've seen recently, the Chinese government stepped in and said, hey, we don't want to fool around with this. That, this decentralized finance is not for us. We want control over what goes on in our country and our money supply. And they virtually banned cryptocurrency. They're also working very actively on a e-yuan, where they have a totally digital currency. And they see that as a way, again, for the government to control the entire financial market. And also recently, El Salvador, not a big country, not a powerful country, but they've come out and said, we sort of scrapped their own currency, and they've adopted Bitcoin along with the US dollar as their national currency. Still early stages to see whether that really is going to play out and be successful for them or not. But there's a lot more activity now than we had seen in the last 5 years or so. Next one, please, Stephanie. And by the way, what I'm talking about here in these first couple slides is some of the more hype things, because there is a lot of hype around these two areas, the cryptocurrency and NFT. Then following me are the smart guys that Kyle is going to talk a little bit more about the technology behind some of these things. But as we get into NFTs, and Stephanie, I think one of the slides jumped forward, that NFTs, which took me some research, that is a non-fungible token. I scratched my head and said, what the heck is a non-fungible token? And someone said, well, it's something that you can own, but it's in a digital form. It's not the real thing. I said, give me an example of that. So they say, hey, Tim, do you know who Martha Stewart is? And I said, yeah, I know Martha Stewart. She might be older than me. She has cookbooks and houseware, that kind of stuff. They said, she's got her own line of collectible NFTs. I said, there's no way. So I went and looked at her site. It's called Fresh Mint. And she has collectible pumpkins, as you can see on the screen here. I think there was like 12 or 15. The famous artists carved the pumpkins, and the digital, not the pumpkin itself, that people could go and bid on those. They were buying them for, I think, $10,000, $15,000. And then one of my favorite artists, Snoop Dogg. Not really, I don't really know Snoop Dogg. But he's, as Kyle was telling me, he's a whale on this NFTs. He's got $20 million worth of his money invested in NFTs. And I presume he's a great financial wizard. He's probably somebody we want to follow. And then also, last but not least, one I understand a little bit more, mainstream, is called NBA Top Shot. So the NBA is selling the digital rights or digital highlights of basketball games, folks dunking three-point shots, amazing passes, and you can own the digital rights to certain NBA highlights. So a lot more mainstream companies like the Martha Stewarts and the NBA getting into this. And there's more of the fringe stuff. I'd say it's probably the Snoop Dogg kind of things going into it. Next slide, please, Stephanie. Jillian, sorry. All right, this again, shout out to Bob Keimer. He sent me a note last week. He knew I was preparing for this. He said, did you see this thing, Tim? Cryptoids. I said, no way. That they've got toys for kids where you can buy as an NFT. So this is, and it's a company, startup company in Miami. And what they're developing is a interactive game, collectibles, toy suite of products. And I brought this up with my daughter. I said, my grandkids would love this for Christmas. I'll get them an NFT. I can play virtually with these toys. I won't tell you what she said. It's not, I can't air it right now. I get in trouble. But it's got these beautiful little characters there. They move around, and your child can own that character, the digital version themselves. They can play a game with it. And believe it or not, they'll be able to buy virtual clothes, virtual costumes for that. I said, wow, I never would have thought of that. I think Bob's an early investor too. He's going to make millions of dollars off this thing. But we might see that sometime in 2022. Cryptoids. And Stephanie, next one, please. I'm always interested in trivia. So I said, all right, what are some of the largest selling NFTs? And let me see if I can learn something about that. And I read this list. I said, what? Someone paid almost $70 million for artwork? And it was by an artist. His name is Mike Winkleman, but he goes by Beeple. Never heard of him prior to doing this research. That the auction house was Christie's, which is a pretty mainstream auction house. I think they've sold Da Vinci's and other very famous artists. But this gentleman, Beeple, was creating a new digital artwork every day, I guess for about 5,000 days since that's the title. And somebody bought that, the digital rights to that work for $70 million. Then there's another one out there, Cyberpunk. Again, I don't have much knowledge about that, but they've made a bunch of those that were made the top 10 list. They were selling for 7, 8, 9, up to $12 million. Also, the source code, the digital version of the source code to the World Wide Web was sold for $5.4 million as an NFT. The good news there was that money was donated to charity, actually to support the web and free speech. And then Jack Dorsey sold the first tweet ever on Twitter for over for almost $3 million. So it's still an open question in my mind what the value is, other than someone else may pay you more than you paid for these things. But clearly some more mainstream, some maybe off the beaten path a little bit things are selling as NFTs. But I was thinking about this while I was putting this together. Actually, I thought about this morning. Thank you, Jeff Dillian, for helping me put this together. But I'm old enough that I remember the .com boom and bust. And as you saw Jillian come on and Kyle, they both told me proudly they were born in the 1990s. My friends, my kids, my students think I was born in the 1890s. It really wasn't that long ago, but it was a while ago. And I remember the .com era, that there were years where things were just booming. And many of you remember the stock market was going nuts. I think NASDAQ went up like 400%. All of us are getting rich. All you heard was the internet, communications, computer. A lot of us were getting computers ourselves for the first time, moving from desktops to laptops. Very, very exciting time. And the internet was going to take over the world. And any company that had the name had .com at the end of it, or internet, or web in it, were going to be killer kind of companies and worth billions and billions of dollars. And you may have remembered some of these. Pets.com. I'm sorry, I have a little typo there. It wasn't Pets, it was Pets. Pets.com, Webvan, one of my favorites, Boo.com, WorldCom. And you guys, some of those that are in my generation, remember what happened to those companies. They're no longer around. And I saw my friend from my Intersil days. We were a company working in the early days of Wi-Fi. They were doing some things around this time. Also, a small company called Amazon was doing some things there. In the Super Bowl in January of 2000, that there were 12 Super Bowl ads out of about 80 ads. So just like now, that was a time there was a lot of hype around the internet, around, we can be connected to everything. Everything will be online. The world's going to change as you know it. And many of us can look back now and say, yes, many, many, many things did change. It took a long time for some things. Also, as I put over on the, we hit the bust. That we had this big bubble build up, a lot of money going into these companies. And yes, it hit bottom. I think the market dropped, NASDAQ dropped about 80% in the span of about a year or so. So most of the market gain from the boom got lost in a very short period of time. Many of the companies that I mentioned over there are no longer in existence. Yeah, somebody just put on, Google was a small company. A lot of companies we know now, they were in the formative stages then. And maybe that's what we're seeing here with the NFTs and the Bitcoins. There's a lot of noise, a lot of hype. Many of the companies will not make it, but maybe they've laid the tracks, or the foundation for what we're going to see over the next decade, 2 or 3 or whatever. Or maybe, it's not that. But it seems to behoove us to understand more about what these terms like blockcom, stablecoins, bitcoins, cryptocurrencies, NFTs are, and whether we personally get involved with those or not. It never hurts to know something about those so you can make informed decisions. But the whole .com is the analogy I use as I go forward. And I think about where I sit today. E-commerce is everywhere. That we were moving there, and with the pandemic, it took us, we leaped forward a decade or two. Many of us had to move our classes online very, very quickly. That in my household, we would buy things online prior to the pandemic, but now most things other than groceries we buy online. I can't remember the last time I've been to the mall, which is crazy. Most of us have smartphones. I get harassed by my students. I think I've got my daughter's iPhone from, I don't know, probably I have an iPhone 5 if I'm lucky. It works though. But everybody's got iPhones now, even very, very young kids. And if you see, I see my students come in now, they walk in with their iPhones, it's on, they're doing something with it, throughout class they're using it, as they walk out, they're using it. And I heard a survey today said that the average screen time of young people in the United States went from like 3.5 hours per day up to almost 8 hours a day with the pandemic. Whether it's, their smartphones, their laptops, their other devices they've got. But the exciting news we got for you, I was working with Stephanie, Bino, and Jillian, and the whole office here. I said, what can we do to really jazz this presentation up? And they said, well, we have this thing called Day of Giving coming up. I said, well, that's kind of boring. We're going to scare all the alumni away if we tell them this Day of Giving. They're not going to answer your phone calls or your emails. I said, yeah, can't we get some kind of NFT and maybe we can auction that off? Maybe we could raise a lot of money. And Jillian said, we have this thing that was actually made by our own art department that if people donate, there's going to be a random drawing. I don't know, Jillian, if I can say what it's for. I don't want to give it away. But to some cool foreign country. So they came up with this picture that you see on your screen. And it's called Jamaica Pete. I said, that would be cool to be the first ever Florida Tech NFT. And maybe we got somebody online right now that's willing to go pay us maybe 3, 4, 5 Bitcoin for this. They would be a hero. I'd be a hero. Maybe I can keep my job for another week or so. Who knows what might happen here. But so I'm going to keep working to see if we can get an NFT. Jamaica Pete, the first one ever for Florida Tech. It's going to happen November 9th, 2021. Or maybe not. But with that, let me turn it over for a bit more of a serious discussion of some of these topics with Kyle. Kyle, are you ready?
Yes, sir. Thank you.
Great.
I was thinking, Tim, do you remember? I remember you taking our signatures after we graduated or after the class, in case any of us made it big, became the next Fortune 500 CEO. It'd be worth some money. So I think you should turn that collection into an NFT profile. You can start auctioning those off.
That's a great idea. I have 2,000.
Wow. Very nice. So, Tim, thanks again. Really appreciate you inviting me out here today. And special thanks to Scott. You guys may know of him as Dr. Benjamin for recommending me for this. I don't know if it was mentioned before, but currently I'm a financial analyst at USAA. And before we dive into crypto, I just wanted to start off and give you a background of what's led me up to this point, so that you have some context as to where some of my insights, logic, and opinions are coming from. I know in the poll earlier, many of you stated that you don't own or you're not interested in owning cryptocurrency and digital assets. So I appreciate you being here and keeping an open mind and maybe learning more about the blockchain side of it as well. And let's see here, starting at the top, I graduated from Florida Tech in fall of 2014, where in the reserves, I served as a second lieutenant and then as a financial advisor for Raymond James. After obtaining my Series 7, which is your stockbroker's license, and my Series 66 is the Securities State Law exam, I picked up a designation as an accredited asset management specialist, and then decided to combine the two by the two being my military experience and finance experience to work as a financial advisor for USAA. So I moved out there to San Antonio. So after being there for a while, I realized that there was a low ceiling as far as career progression as a financial advisor at USAA. So I began to look for more internal positions, where I then accepted a position in a financial development program where every 12 to 18 months, I rotate to a different line of business across the enterprise. So starting in June of 2019, I started my first rotation in data and analytics, So understanding finance, what I knew about financial planning, and then data and analytics, it really helped me connect the dots between blockchain and digital assets. Then my second rotation, I rotated over to our bank stress testing team in the midst of an actual stress test with the pandemic. And then now my third rotation, I'm serving as a project manager in our chief financial office. So after I gave up my licenses to pursue more of these staff positions, I decided to take on higher risk investments. So I started trading option contracts with my personal assets, using lessons learned from my finance background. I was looking at geopolitical events, macroeconomics, and was tracking the COVID cases while they were overseas. So I short the market. I put in call contracts on the VIX, and I turned 5K into six figures overnight. And as the cases continued to climb, I tried to chase it even further. And then shortly after that, lost 40K in a week when the Fed decided to inflate the economy by rolling out stimulus. So at the time, I was really frustrated with how things were going, and I was concerned about the inevitable inflation to follow. So I decided to restructure my portfolio to hedge against hyperinflation, which led me to gold, silver, and Bitcoin to Ethereum, and then the rest of the crypto space, and then more to in the underlying technology of blockchain. And I've been in here ever since. So myself, like many others, came to crypto for greed, but decided to stay for the revolution. And I've no doubt that inevitably there will be mass adoption. So I formed an LLC, which was basically to create a legal structure that allows me to invest in digital assets under the umbrella of a self-directed Roth IRA and not having to pay taxes on the earnings. So because I believe it to be imminent, I named the company Father Time Investing. And then,
what Kyle just did, so I think maybe I was smarter than him 7 years ago, but the day after he graduated, he passed me pretty quickly. But I was smart to get him to talk about this stuff coming up here. Great intro, Kyle.
Thank you. And then one thing I want to point out is that although I am an advisor at USAA, just quick disclosure, anything I share today is going to be based on my opinion and no way, shape, or form the opinion of USAA. So first off, blockchain, what is it? Nobody knows what it means, but it's provocative, gets the people going. So I'll break it down into the simplest of terms. It's basically a way to track and store data. It doesn't have to be money, but most people, that's whatever, it's top of mind. It's what most people care about. So the major difference between a blockchain and a database is that the data can't be rewritten. So if you think of an Excel spreadsheet, you can create it, you can read it, you can update it, you can delete it and share it. But with blockchain, you can only add new information. So a new block or data can be added, and then each new block that's updated tracks the hash or the serial number of the previous block. So it's time-stamped, and then on one side of the cube has the previous block and then the preceding. So it keeps everything in line, and it provides an audit trail that uses cryptography to where it's immutable. So you can't change the record. So it was first introduced with Bitcoin, which used this technology to prevent the double spend, so that you can't take a Bitcoin, copy it, and send it to 10 other wallets. It can only ever be in one place at one time. So this creates trust through decentralization. And that word is probably the most overused and misunderstood in all of blockchain. So again, to simplify it, centralization or decentralization of a network is based on how many individuals or entities can control it. So in these illustrations, you'll see the far left is something that's centralized, meaning there's one point of authority. So if there's a bank, and then there's all the individual bank accounts under the umbrella of that bank. Decentralized is the second photo there. There's no single authority. Individual entities can be owned and operated by themselves, but a distributed ledger is where everyone's interconnected on the far right. So as an analogy to explain all of blockchain is imagine if you had a book and every single time somebody went to write in the book, it appeared in everyone else's. So imagine 100 people, they have this book, you write in it and it appears in their book, kind of like an online Excel doc. And then every time an entry is made, it's time stamped and can't be erased. So therefore, it's a trustless way of tracking and tracing all of this data using encryption. So it's basically like an amalgamation. It's like a combination of a bunch of older technologies. So you've got distributed ledger technology, cryptography, and group consensus. So real quick to give you I guess a non-money related example to where this can be used for data as well is let's say you go to the airport and you want to buy sushi. And I know what you're thinking. No one in their right mind would trust sushi airport or airport sushi. But with blockchain, you don't have to trust the vendor that's providing the product. You could scan a QR code on the product and trace it all the way back to its origin. So it can provide insight as to how long the fish has been out of water. So when was it caught? Where was it caught? Where has it traveled? What temperature has it been along the way? And any other health and safety questions that's recorded on the supply chain. So jumping to the next slide. Back to the money example is you say, okay, well, what's the difference between crypto and fiat? Fiat being backed by the government, so your dollar, yuan, pound, peso. So neither have an intrinsic value, meaning that we don't physically use either to build anything tangible, unlike commodities like a gold or silver, you can use to produce electronic devices or jewelry. But the major difference is that fiat is backed by government, controlled by a Federal Reserve or single entity, and has an unlimited supply. Because now it's supposed to be separated, the Federal Reserve from the government, but the Treasury, the US can issue Treasury bills. The Federal Reserve buys the Treasury bills, and then the Treasury pays interest on the Treasury bills to the Federal Reserve, but then the Federal Reserve is required to send excess revenue back to the Treasury. So they can inevitably print as much as they want, and that's what leads to inflation. So crypto, on the other hand, has a limited or fixed supply. It's not controlled by a central authority, so therefore it's not backed by anything, and it's left up to its value is left up to whatever a free market determines it to be. So this is where we kind of see an overlap. Tim wanted me to mention as well stable coins. So stable coins have tried to get the best of both worlds by bringing stability of an established currency with a large market, with the flexibility of being decentralized and free for all cryptocurrency. But unfortunately, with that, it also has the worst of both worlds, in that its value is still centralized because it's backed by a central bank, and its trustworthiness is still questionable in the public's interest, because the way the audit system works up right now, they don't know that there's an exact collateral for that stable coin. So that's still in the works. I know a lot of governments, China's come out with the digital yuan, and most others are looking into it. So excited to see how that unfolds as well.
Scott, the idea that someone had a stable coin, if they had, say, $10 million fund, they would have $10 million in US dollars on reserve. So if I ever tried to trade it in, I could get that currency. I could get the fiat currency.
Correct. Yeah. That's the case. Is that they've got a 1-to-1 peg to the dollar. I know there's litigation right now. That Tether is one of them, where a lot of people are accusing, they're saying, hey, they don't have the collateral that they're saying they do, and people are questioning whether or not. So a lot of times they're saying like, hey, they're printing Tether to buy Bitcoin and then selling it to use as collateral. So a lot of this will shake out once regulation is in place. But right now, a lot of these agencies are fighting over jurisdiction of them, because a lot of cryptocurrencies or digital assets, they fit the bill of security in that the initial sale of them is to raise money to fund the venture, whatever use case that is looking to solve. But then over time, it becomes decentralized enough to where it no longer depends on the efforts of the company that's produced it. So it's get pushed off onto an island. They say, hey, this is adequately decentralized, at which point it becomes more of a commodity. And meanwhile, still acts as a currency if people are accepting it for payments, and it can still be instantly transferred. So you've got the OCC, which regulates currencies. You've got the SEC, which regulates securities, and the CFTC, which regulates futures contracts on commodities. So it's going to have to evolve into some sort of a hybrid model that, for one, explains what adequately decentralized means, and then whether or not it can change over time and how. So there's just a lot of unknown right now, and technology is advancing so fast it's hard for regulators to keep up. So it's not a matter of if, but when, in my opinion.
And Kyle, that reminds me of like the early days of Uber and Lyft. Used to have, a lot of the cities would have medallions for taxis. You had to be, they were regulated a certain way and limited, but then those folks sort of came in with a whole different model. And at first there was a lot of fighting going on, but it seems now that the regulations have settled down, that in most cities, Uber and Lyft can operate. We still have some taxis, but fundamentally changed the models. We've seen it. And this might be in early stages of that also. Yeah,
absolutely. I know we're running short on time, and I want to leave time for questions. So just real quick with this, just a high level overview of some of the market trends. So because Bitcoin has the advantage of the first to market, it dominates the crypto space as far as market cap. So historically, the price of Bitcoin kind of steers the crypto market. And I've got this illustration here that kind of shows the funnel where new investors, they prefer to invest in something that they know. So new money comes into Bitcoin, and then once they experience a gain, a lot of times they'll diversify, they'll take those profits and they'll put them into larger cap coins. And then the early investors who get profit returns on those, it goes downstream into lower cap projects. And because the market caps are so small, it doesn't take much to see, huge parabolic moves, which creates an alt season where altcoins are just anything alternative to Bitcoin. So I just wanted to provide this as well as some do's and don'ts on crypto trading on the next slide. But again, I won't go into detail there so that we have time for questions. Oh, Tim, do you want me NFTs? I know that was a big one. So I'll skip to the next slide. And these are some from my personal collection. On the far left are, it's called .crypto domains. So instead of having a .com or a .org, it's basically the internet built on a decentralized network so that you can't be shut down or censored because somebody doesn't like the content that you're providing. So that's one example of the NFT. The second is Rob Gronkowski NFT. He's the first or major one to basically come out, launch his own non-fungible token, which is basically like a digital football card to commemorate his Super Bowl championship wins. The third one there is actually one that I've created myself. I commissioned an artist for a separate endeavor, but because I had the copyrights to the graphic, I could create the NFT. So I created this as one of 19 pieces, which I minted on the Ethereum blockchain and have sold about half of them. still holding on to the others, but mostly just wanted to do it to pioneer the space and to timestamp my place in history as being an early adopter of the technology.
Hey, Kyle, one of the questions we got here was whether, as an owner of the NFT, you own the copyright or not. Maybe you could talk about your Day of the Dead. Who owns the copyright? What did you actually sell?
Yeah, so if I didn't own the copyright to that, if I just screenshot an image and sold it, then they could come after me for copyright violation. But if you purchase an NFT, you own that token, but you don't own the copyrights to the image. So you can't buy an NFT of the Mona Lisa and say, I have the copyright to the Mona Lisa. Anybody who uses the Mona Lisa is going to have to pay me royalties. Hope that answers the question.
Yep, thanks.
And you guys, I don't know if this will be sent out, but I just included some additional resources. The Blockchain Council and the Blockchain Training Alliance are some of the resources that I shared. Those are for some of the certs and online degrees that I picked up. There's a link to an article where State Farm and USAA are leveraging blockchain to simplify the last step of our claims process called subrogation. And then there's some other TED Talks and YouTube videos that I thought might be useful for you guys.
And I will send out a link to the event recording tomorrow, as well as a copy of the slides. So you guys don't have to worry about that. You'll have access. I'll send it out tomorrow morning.
Great. Thank you, Jillian. I'm just trying to look through the chat as well, see if we had any more questions.
And Kyle, I'd like to say something. So we tried to, with this presentation, was bring you different viewpoints. And Kyle represented our younger generation that has grown up with this stuff and has embraced it wholeheartedly. I talked to probably 6 to 8 different financial advisors who most of their clients, I'd say, are probably 50 years old and older, and asked them about cryptocurrencies and NFTs. Now, the first thing, unlike Kyle, most of them did not want to come anywhere near being recorded or, using their name related to these topics. And what they were telling me was they're hearing more and more of their clients are asking about it, but have not gone into any of these items yet. And what some of the more progressive financial advisors are saying to this group of 50 plus is that this is a very speculative area right now. As one told me, it's like gambling. If you want to go take some money to Vegas and you have a good time, there's a good chance you lose it all, but you enjoyed the experience. They said, you might want to view that with your retirement funds now. Take a small piece, whether it's 1%, 2%, 3%, 4%, whatever you're comfortable with. And if you want to go dabble in this, learn about this, speculate as opposed to invest, and they're in strong enough financial health that's not going to affect their retirement, then go for it. But none of those advisors are telling us, older generation, to put any large percent of our assets there. So, and like Kyle, it's just, these are personal opinions, personal advice. Jillian was kind enough to call us experts. We're certainly not experts. Kyle's closer than I am. I can barely spell NFT.
Yeah, for
sure.
sure.
Field, right, Kyle?
Exactly. Yeah. And I'm no way an expert as well. I'm not a cryptographer or have a background in software engineering. I'm just applying what I know about financial markets and data and analytics to the space. So another reason other financial advisors haven't come and spoke about it is because of all the disclosures and regulatory. Without clarity, they can't share a lot of this insight. Whereas me, I hung up my license last year. I'm not going to be financially liable, if somebody construes what I'm saying here as financial advice. But what else was I going to mention?
Hey, Kyle, it was about crypto gains. And do you know much about that field?
Which field?
How crypto gains are taxed.
Yeah, so taxes on crypto is a little bit different, but essentially it's the same way it would operate with a stock, where if you hold it for less than a year or a year, and it's going to be taxed at a short-term capital gain. Hold it for longer than that, it's going to be a long-term capital gain. There's no wash sale rule, so you can claim losses and buy back into positions. But what's interesting, a lot of people might know as far as tax goes, let's say you buy Bitcoin and then you convert your Bitcoin to Ethereum. You think, oh, it's in the same account. I'm investing in different crypto. It's not creating a taxable event. It is. It's considered the sale of Bitcoin and the purchase of Ethereum. So you will realize a taxable event. I use softwares, which basically each exchange that I use, it attaches through the APIs. So it basically pulls all the data from my trading activity and aggregates it into one. And I just produce this statement for tax purposes. So yeah, be careful. Exchanges that provide you with information at the end of the year, but be mentally or financially prepared for the tax consequence if you experience substantial gain or loss by trading.
Thanks, Kyle. We do have a strict time limit today, so I think we have time for one or two more questions. Darcy Bunting asks, can you explain the mining process? And also there was a lot of discussion in the chat about what it takes to mine and is it environmentally friendly? There's been a lot of talk about using a lot of energy and not being sustainable. So I was wondering if you could touch on that.
Yeah, so Bitcoin and Ethereum, they use a specific, it's called a consensus algorithm, and it's called proof of work. So the way that they provide security to the network is because of the cost it takes for a computer to solve a random key, which is rewarded the next Bitcoin. So this prevents people from being able to spam the network with multiple attacks, because it would cost a lot of resources to be able to run the computers. So that's part of what gives value to the ecosystem, is the value of the crypto and the process to mine. But since then, it's evolved to where proof of work is like a first generation blockchain. It's antiquated technology, but it does have particular benefits. Nowadays, like third and fourth generation cryptos use what's called proof of work, where everything is pre-mined, so it doesn't require useless mining or fossil fuels. It uses a proof of stake consensus algorithm. So it's trending away from that. Ethereum right now is moving to Ethereum 2.0. It's moving from that proof of work to proof of stake. So we won't have to rely so heavily on having to solve complex problems and use a lot of energy.
But for right now, it is a problem, though. Mine is the thing. All right, Jill, you want another question?
Yeah, I remember seeing one way back in the chat, and I don't want to take time to scroll and find it, but someone asked about the process of mining more cryptocurrency and comparing it to just printing more dollar bills. How does that work in terms of like retaining the value of cryptocurrency in the long term?
Yeah, it's the tokenomics is, I mean, it's different for every project you look at, but Bitcoin, for example, it has a fixed supply of 21 million. So right now it's closer to about 19 million have been mined, but once that 21 million has been mined, there will never be another Bitcoin mined. And every 3 or 4 years, it depends on the mining rate, but the reward is halved. So what started, if you solve the algorithm, you would receive 50 Bitcoin, got cut to 25, 12 and a half. It keeps getting halved. So these bull cycles in crypto typically occur every 3 to 4 years after the halving of Bitcoin. So essentially every 4 years, the supply gets cut in half, So demand being the same, price shoots up. So that's what we've seen historically up until this point. Now that it's becoming more mainstream and getting a lot of institutional interest, I think we're going to decouple from that traditional 4-year cycle as being so predictable. But that's what we've seen so far.
Awesome. Thank you, Kyle. So we are out of time for today. So thank you everyone for participating in the chat. I think we could have made this a 3-hour event. And I'm definitely going to have to rewatch it so that everything can soak in. So I will send you all a copy of the slides and the recording tomorrow. And I just want to thank Tim Muth and Kyle once again for being our maybe experts today. I know Tim insists that he's not an expert, but for talking to us more about this subject. And I hope to see you all for another virtual event soon.
Thanks, Jillian. Thanks, Kyle.
Sounds great. Thanks, Jillian. And for
Everyone.